Hello, everyone. Today is April the 2nd. We've got a lot of news coming out. Things are probably going to be a little bit messy, but here we go. It is a Wednesday, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we begin with the E-mini S&P 500. What I wanted to do with these recent moves of here's where your profit target, here's where your entry is to really tell us, if we're in the middle of a trade, where the real risk levels lie. Now, you can trade in tighter time frames, but for this, it's a bigger time frame that allows you to see what's going on in a bigger picture while you work yourself through the smaller pictures. So, today's implied volatility move puts us at the top near 5708 on the upside. Notice the 200 is above there, so there's a potential squeezing event to the top that could push us into 5720. Remember, implied volatility moves work nicely. They also tell us if we have a break to get out of the way, because it means that the options traders are going to have to follow in the direction of trend to flatten out their delta, right? They're normally naked on the top here and naked on the bottom, all right? So if they move out and they go, oh my, I'm in trouble, this is why these kinds of big wicks that we actually saw on the 31st occur, because they slip past the measured move and then they trade down with the formation and then begin to recover. They leave their option alone. They just use the equity to help balance their delta, and as soon as it sorts out, they get out of the trade. So that's how we use these measured move formations. There's a fairly wide range that we are seeing, and if we look carefully, we can see that we might be in a pattern that shows a potential flag into that 200. So bigger picture, we got to keep our eyes on that if that is likely what's happening. Right now, we do have higher lows, so we know that it is a dip buying formation in general, and we have heavy congestion here. So why do I have the entry all the way down here at 5603? Well, we could have a Wicky Day, and what I want us to remember is if we participate in this area that has bleed through, the likelihood that we get more bleed through is there. And so rather than say, hey, listen, take the buy zone at 5625, I would rather say, watch the behavior at 5625. And if it recovers, you're in good shape to take the long into the profit area. But if it does not, wait it out. Now, let's say you've got a short slant to the trade, and you're thinking to yourself, this is totally going to roll over. What would be great to see, and it's already confirming that there is this motion into the accumulation space, any bounce that fails to recover this morning's Globex, which is 5671, that's going to give us a short, right? And you can trade it right down into the areas of prior entry. So although I have this drawn as a long trade, you can use it also as a short trade with the failed bounce off of the 1 hour Globex open. Okay, and that number is 5671. As long as we stay below that, we're going to head into this space that provided value for some of the traders. When we say value, we mean inventory accumulation, a space where everybody's arguing about what price is right. And, there you have it. Okay, so be careful for wicks. I think they're going to be around all over the place. Let's look at the NQ. Implied volatility suggests that we have a move somewhere up into 19,730. Now, it is a personal decision that I look to the past for heavy congestion, and I sort of match what's happening with the measured move as close to that region, right? So if you go, hey, I'm going to do that measured move by myself, you know that you can go to the option chains and look at the price action and look at implied volatility and go, okay, I just need to add XYZ to the current price to give me the range. And if you go, well, that's not the number she has, I'm always looking to the left to see if there's old support, new resistance, or heavy congestion that meshes with that number. And so that's the one I'm going to use sort of in between those. Okay, so implied volatility suggests upside pressure into 19,720, right? Notice the VPOC, the volume point of, no, that's the VWAP, excuse me. VPOC is up here. The VWAP is a very low volume node, and that low volume node, we could run right into it and then reflexively break. Remember, if you break the implied volatility space, get out of your position because it could run pretty hot into the next ledge, which is 150 points away, right? And when it loses it again, then Bob's your uncle. Okay, so there we go. Where's the target? It's way down here. Now, could you say, instead of saying, hey, 19,326, I don't want to do that. I want to head in here at 19,415. Listen, great number. The risk event is going to be the bottom of the prior day's Globex. That's why I have these lines here. That's 365. If you're trading the short, to me, it's likely that we could come all the way back into this baseline event, but the trade did not trigger until we lost 19,595. Why? That's the low of the Globex. And it spent 1, 2, 3, 4, 5, 6, 7, 8 hours there before it collapsed, right? Did momentum continue to move? Yes. Did the VWAP continue to move? Yes. So you know you've got a short there. It took a long time for it to break into support, and I do believe it comes into 413 and then 365. Potentially, you could take the trade long at 413 if you are so inclined, but there's a potential stop 19,384 all the way down to 19,365, right? The measured move for the baseline, 19,224-ish, right? That's where I have the stop sitting. Why? Because I know if I'm going long and I actually try to get it off of this move, if it loses it, it's a reflexive activity that's going to occur with the sellers of this put. They're going to go, holy cow, I've got to sell the equity so I can balance my delta and I don't lose $1 zillion today. And as soon as it recovers, they leave the trade and then they're back to collecting all their premium. Okay? So just pick your poison and manage the risk. Let's go to the YM. The YM only has measured moves for the quarterly contracts. The implied volatility shows the low end, 38,800, the high end, 45,150, thereabouts. We can see from the hourly formation that we are just bunched up in this value area. So what are we likely to do? We're likely to go from the top of a value area to the bottom of the value area. Now, my suspicion, since these are also making higher lows, my suspicion is that if we have a wick, it doesn't fall down into this lower value area at 41,680. But where would you want to take the trade? Listen, the wick is very likely to occur. So if you go, hey, I don't want a 140-point stop. How about if I wait for it to come into the space and it resolves up over my 41,920, and then I can run. Listen, you might feel like a hero if you actually enter near the stop. I like that. But wait to the bottom, let it recover. You can get in there, but then your stop can be quite a bit tighter, okay? And the top of this congestion is where I've put the stop level, right? That's why it isn't all the way down into the opening range of that Globex candlestick. There's just a lot of congestion there. It should not move down to 41,700. Okay, so everything looks like it's about to fade, but what have we had in the last little bit? a bounce and motion. This chart, just like the others, looks like it's in a mean reversion into the bigger moving averages. Let's go to micro Bitcoin. Look at the difference here. Look at how much risk is associated with this trade, right? Wick all the way down here at 82,000 and such. Okay, the measured move, it feels to me, and I have to test this out, it feels to me like the options are mispriced here in micro Bitcoin based on the moves, but we shall see, because they're only pricing in 1,000 points of motion. I think that's very bizarre, but we shall see. What is this showing us? Well, it's a little bit of a messy patch, right? We had inventory accumulation here, distribution at a discount, return to inventory or value, and then dropping again. This was the opening candlestick formation in the overnight. That's like 85,900. The low of the candlestick, 85,400. Look, it bounces and cannot hold that formation. This is an opening range from way far ago. And so as it loses the Globex low, the short is engaged, but look at how messy the short is. Here's the topping formation. Here is a low area that is also a high of a previous Globex event. And we've got these moving averages that are like pesky long, right? So I say stay out of this trade until it either breaks and you get a run into the implied volatility, or it breaks to the downside and you get old resistance that turns into new support and you get yourself your motion. Okay, this chart is super messy. I would not be trading it in general. Let's take a look at oil. Okay, let's go to the big picture here, right? Oil is certainly moving off of these reflexive areas. This is the last area of value or inventory accumulation. It went to the halfway spot. Yesterday I talked about 72. Came sort of into that zone. Actually, it just tested it and moved out. 73.50 is the next space. And I said, hey, listen, if this can get to 70, it would make a nice long, which is right down here. So if we collapse into the 1 hour, you can see that's why I've got this as the entry. Okay? Now, what is the opening range candlestick formation telling us? It's telling us, hey, I just lost that zone and I've come down into support. So right now there's a new value area building. The short, 71.20 or so, and then the support action at 70.60 all the way down to 70.20, right? With a stop in this heavy congestion. It should not get into this space because if it does, it's very likely to head to the implied move. So can you say, hey, I want to short it here? Yes, the technique says the bounces into the Globex area and the rejection of it gives us the downward motion, but a lot of people are buying 70.70, right? 4 hours of buying at 70.70. We've got an upward 50, downward motion here. So for me, I would say if you're thinking of taking a short, it's better to get to the top of the value area. It's around 71.60. I like the 72 area for the rejection of that zone, and then try the short there, right? This is in a clear dip buying formation to me. So let's wait. Let's watch the wiggles. Today we've got the EIA report. We've got all kinds of things coming out today, right? We just need to be vigilant. We need to trade small size. We need to be very careful. All right, moving to gold. Here we are, topping formation yesterday, right? Savage fade. Now, today, where are we? Well, that's more dip buying, right? So, fiat and central banks, they are continuing to accumulate gold, and they're asking for delivery of these contracts, which will make for a very tidy mess because they're telling them it's 6 to 12 weeks for delivery of the ingots. And so this could continue to rally. There's also a fear-based event sitting around in here. The 50 is up. Moving averages are flat. Pullbacks are buy zones, but we could see ourselves a wick. I suspect that this is the bigger value area. So I would be looking for a test and recapture of $3,141. And then if it gets to 31.68, that's great. The measured move, implied volatility is very high right here. They're calling for 45, 50-point moves, right? And since that matches my Fibonacci, I'm okay with that, right? So 3,100 on the low end and 3,197 on the high end, which probably could stretch to 32. Okay, here we go. SPY. Measured move, 565.80 matches the congestion zone here, this area of inventory accumulation and value. Right now, moving average down, underneath the VWAP, underneath the moving average, which I have widened out because that 5 just looks too busy for me on these tighter time frames. I don't like to trade them. And so what are we looking for? The return to value. So we're going to go from the top of value to the bottom of value. I think that number is about 555. If it comes there and you go, I'm buying it, it needs to immediately move in your direction, or you're going to be sitting on a $2 loss, right? Implied measured move puts us down into 552 and some change. It could be a little bit higher. It could be 552.90, but that is the space. So either try to get in near your stop, which gives you all kinds of squishy room, or wait for the chart to resolve in the other direction. And you can use that with a 15-minute time frame, right? Long entry looks like about anywhere from 553 to 555 with the target at 560, top of congestion. It could end up being 561, right? Every single chart appears to be in a reversion trade into this 200 simple moving average. I'm seeing that all over the place on the hourly formations. Okay, here we are with the Qs. The QQQ, same sort of thing. Implied volatility anticipates 475. That's old support, so I'm okay with that. Implied volatility to the base of this support zone, 463. Risk is a little wider. These candlesticks in the Qs move very aggressively. I like the entry point at value area low. That looks like 465 and some change. Can it lose the zone? You betcha. By more than $1. So let it come in here, slip to your tighter time frames. Maybe you want to go to 5 to move it out, and then you've got yourself upside pressure into the prior resistance zones. Okay, last one. Well, no, not last one. I'm going to look at UPRO. Got to wait until it comes down into this range. I like 71.50 before a bounce. I do believe we're in some kind of reflexive action that sends us into the big moving average. It's all very flat, but we should still be able to buy the bounces here unless we lose 71.50. Other than that, movement up into 76 looks pretty good. Measured move for the week all the way down at 69. So if it loses this area at 71.50, get out of the way. Absolutely get out of the way. SPXU, this is my last one. Here it is, topping formation, topping formation, topping formation, right? Look at where momentum is. It's bizarre, right? Moving average of the 50 up. Remember, if the market takes a dip, this will flex up into its upper edges. That's $26.30. If the market takes a bounce, this will fade, likely down into about 25.13. Of course, this is above its 200 because it's an inverse ETF. But if it loses this 24.90, I think it could get to 23.70. The implied move says 24.50, which is the top of this value area mapped out on March 26th. Easily, I see it coming back to the bottom of the value area. All right, that's it for me, folks. Take care.